I use this simple strategy every single day on my TopStep account, my Funded Future account, and all of my other funded brokers. I will tell you that it is a simple strategy, but it does require patience. And the number one thing that I can tell you over my time trading is that patience has been the biggest factor of what pays in the market. If you are willing to wait for a good setup rather than taking a bunch of bad setups, you will do a lot better in the market compared to everyone else, and you will not be a statistic, at least hopefully. Enough talk, let's get to work. Okay, so a few things I want to jump into first before we dive straight in, right? Everything that I do, and I mentioned this like in all my videos, it all bases around price action and volume. Now I go into more key like definitions of key levels and supply and demand, things like that, right? But at the end of the day, it's all based on previous action, okay? So what I'll say the weaknesses are first for you is when you get into all-time high territory, like you don't have targets. Like, so people that say, okay, you're measured moving this and that, I think that's all like BS, to be totally honest, okay? And I'll show you the indicators that I use that help me during that time. But ultimately, you need to understand when you're at breakout potential, that is when you maybe are the most in the dark. However, you do get some of your best moves at all-time highs. So we'll go exactly into that, okay? So that's number one, is that it's all based around that. Now, before I go exactly into the strategy, I want to explain two things. My trading is all based off of price action and volume, meaning I'm watching previous action of what's taken place and the volume that took place during that action. Why? Because this is the only way that you can truly look at what's happened in the market and look at where buyers and sellers were taking place overall. And you can look at this time and time again. Now, I will say there will be times where there will be fake outs and you will lose. I don't ever want to claim that I will never lose, because that is a lie. You will lose in the market. But doing this is putting you in a statistical advantage of looking at the market. And you have to remember, at every point in trading, you have to let the numbers play out. Now, let's go into exactly price action and how I view this and things you should be looking for. Okay, because I'm going to be quicker when we go into the actual strategy. And I'm using NASDAQ here just as an example. I think it's just the cleanest and easiest to use. Now, NASDAQ, if you look, this is the 2-hour chart. We'll even go further. I'll take the 4-hour. Now, a few things I want to say is it's always a top-down approach when you're looking at price action. What does that mean? If I'm looking at you want to start like at a daily or a weekly time frame, because that'll show you the underlying trend, right? So if the daily and weekly are bullish, that's what really matters, right? And we always want to trade in the direction or favor that type of trade. Meaning, if we're in a long-term uptrend, then I think 70% of my trade should be focused on the upside, because it'll make more sense and you'll make more money. If you're in a long-term downside, downtrend, then again, you're looking for the inverse of that. So things to be looking for. That's not saying that you can't go short. It's just knowing where the strength is and knowing where you'll make the most money. Again, because you're putting yourself in the best position to win. So really quickly here, like we can quickly see this is like a 4-hour. You're clearly just like upticking, right? Now you had a little area here of consolidation on the 4-hour where you kind of broke down and you kind of just ranged back and forth. But ultimately, what do we also know? What constitutes an uptrend? Higher lows and higher highs. At the very least, you want to see higher lows. A downtrend would be lower highs and lower lows. At the very least, you would like to see lower highs being established, right? So again, a really good rule of thumb, like just drawing it out for you, because sometimes I'm a visual learner sometimes. So at least what you want to see is scaling up, meaning that you're just slowly but surely just making higher lows up and up and up. Now this can mean though sometimes that you'll be making, you push up, and you're making higher lows, but you're not really making a higher high. And so you're still making higher lows, but this is still a breakout potential to push back into highs. We'll go more into patterns too as well, but that's the biggest thing there, and inverse to the downside as well. And so that's what you're really looking at here. And so quickly off of price action, and I'm working on an indicator as well with Lux Algo, so this can all be like simplified too for people, but that'll be down the line, and I'll have some updates on Twitter. I recommend following Twitter. The link is in the bio. Again, like I post nonstop there as well. But yeah, so big things to be looking at right now is marking out those previous highs, lows on the days, things along those lines, and understanding the underlying trend that's really taking place there. As you can see here, clearly making higher lows there. Now, again, we went over price action. Volume, in my opinion, you'll hear me say it in almost all my videos. I think volume is the biggest factor of confirmation when it comes to trading. Why? You usually get good answers with volume as far as reversals and breaking through and going through with a bull flag, whatever pattern you're looking at, right? To get that continuation in that specific direction. Rarely will you not be able to see it on the volume chart. Now, you may not see a massive spike, but you'll see it on these smaller time frames of getting that continuation in that specific direction of what you're looking for. This is how. Okay, now volume. This is the more interesting part here. Okay, volume is, I think, the best indicator. And again, when I go into indicators as well, for this video, all I'm going to be using is VWAP, the 90 MA, and then obviously volume. Now, this is my custom indicator that, Lux Algo, we partnered and they made with me. So I can't do anything about it. The link is down below if you're interested. It takes like $10 a month. I don't know. But they made it. So they sell it. So I don't know what to say, right? Okay. So when we jump in, I want to be really clear about this. Yes, higher time frame volume matters. But when you're day trading and scalping, I will stay on the 5 minute at usually the highest. The highest time frame I'll be on for scalping when I'm looking at volume is the 5 minute. And you're going to notice why. Because what you want to see is a change in structure on volume. And what does that mean? Okay, so volume here historically, so you open up the day here on Friday and you can kind of see the downtrend that's at hand there. You're kind of in a downtrend, right? And then you see an abnormal movement here, rising, a big spark of volume, and it kind of gets normal, and then another spike of volume there, and then you kind of just have that downtrend, and then you have another spike here, spike, spike. Now 5 minute, again, you'll see some, but you won't see a lot, right? You'll see a few throughout the day, right? Important to understand. Now, the 1 minute is where you're scalping, and you'll see a lot more, and you'll see what's really happening throughout the day with those spikes as well. And this is very important to understand, especially if you're just trending in a specific direction far above VWAP. Now, we all know I've gone into VWAP. I think VWAP is one of the best indicators for understanding when you're getting a pullback, where you're getting the buying from, things along those lines, right? But volume really helps you out there so you know what's really happening. And you can use volume for a few things. Number one, you can use it for reversals and you can use it for continuation. So a rule of thumb of something that I'm always looking at, like volume, you see a high volume at the lows. When you're seeing your highest volume specifically in the direction of what you're trading, so if we're going to the upside and we see our highest volume is buying up here, then that could be a big sign of a reversal especially if you start finding resistance there, right? It's called stopping volume, right? So another big thing we see right here, we see some increased volume, right? Sell side, but we still see some continuation to the downside. But another example of stopping volume is right here, where you see not really a lot of volume, a big increase, and then it's met by minimal buying. But again, we start bouncing back up and making higher lows. That's a good example of stopping volume. And again, the 5 minute, the 1 minute will give you more information based off this as well, but only volume really gives you these answers. Now, I've gone in depth with my strategy in some of my other videos. I'm going to use a real example of how I traded this past week and how I looked at the NASDAQ specifically on my accounts. Again, sometimes you're going to be forced to be patient. You're going to be forced to get slower action, right? We prefer to get that break and retest and instant move to the upside, right? But sometimes, again, you just have to let the strategy work. And that's the biggest point here. And I want to continue showing real examples so you guys can see in real time how I'm trading as well. And hopefully this will lead to me doing live streams on the channel as well. Okay, now let's get to the strategy. It'll be really quick, really simple, I promise. So first thing what we're looking for, we're going to start on higher time frames, the 4 hour, daily preferably. What I want to do is mark out previous highs. Now this was our previous high we had back here, all the way back from July. We recently broke above this, and I want to mark out that high here as well, locally around 21.34. Those are my very big levels that I want to watch. Another level I'd be watching is a little swing low here. If you follow me on Twitter, you saw me mark all these out as well. So again, I recommend following on Twitter just so you can understand, and I play a lot of this out as well there. Now, those are the biggest levels that I would have been watching. And the biggest trade that we had here was really going in from Tuesday into Wednesday, and then obviously the end of the week, okay? I want to talk about how you could have caught this breakout right here. Because if you look on the 4 hour, you're like, okay, you went straight up. How did you catch this? All right. So let's break it down, and we're going to go into the 5 minute, 15 minute preferably, but 5 minute is really where you spend a bulk of your time. And I want to go to the 15 just so you can see exactly where. So this is that high right there. And so I want to highlight this just so you can see. And all you're doing, again, when you're looking at your equity, your future, whatever you're doing, you need to understand you're marking out your highs, you're marking out your lows, and you're marking out where, when you have these highs, right, when you push into new highs, where do you start to find support, right? And you start to find support there as well, which usually lows on the day as well can tell you a lot of this. But again, you might have to eyeball it sometimes when we go into this with the key levels video. But you can see obviously there. So these are your two really major points over the past week and a half, give or take, right? And you can see that we kind of got stuck in the range and ultimately got there. So we go into the trade and what's happening there. Now, a few things I'll let you know as far as time frames when you're trading on funded accounts, okay? I'm not saying that trading Asia or trading London is bad, but what you're going to notice is your volume is a lot lower. Meaning what? It'll take longer. You might see illiquid moves. You might see pops. You might see drops. It'll be a little bit more sporadic. During New York session, in my opinion, things are the most consistent. Personal opinion. And again, if you look at volume, I'm going to bring it up down here. And I'm not trying to confuse anyone. I'm not trying to do anything crazy, but you'll just notice New York open. This is London. This is Asia. Not ideal. Okay. So again, do I trade Asia and London sometimes? Sometimes, but it's not my main focus. We need to understand that. Okay. So when you jump in here, what happens? And this happens in the London session. So again, I want to highlight that before I go into this. So I would tell people like start trading London. It's not what I'm saying. But what I will say also too is London historically moves better than Asia, in my opinion. Okay. So you start breaking over that level that we highlighted, which was your previous all-time high. And you can also bring in your VWAP and your EMA here as well. And so you start to get above that here on the 5 minutes. So you break above, and always what I'm looking for is that break and that retest. So you get a clear break, you come back down, you retest, and you start popping back up. There's a few ways that you can trade this. In my opinion, the best opportunity is always off of that retest, and you want to see some sign of buying. And this is what I'm talking about as well with volume, because volume is going to be tougher to read during these other sessions. But what happens here? You see, you break up, the volume is decent, good spike of volume, you come back down, look what's happening there. Very easy to see, declining volume. And then guess what? Even though it's selling volume, the volume starts to rise when you come to that support. Buyers hold you up. It's selling met by volume, and you pop back up, and then volume starts going crazy all throughout the night with the London session as well. And you push back into new local highs. Even if you're trading it off that back into local highs here, which is like a 30-point move, you're still making great money. You're still making really, really solid money. You could trade it even higher. And this is where the 90 EMA comes into effect. There's two things here. Number one, what do we know? If you're above VWAP, in my opinion, the shorter term daily trend is bullish, right? As long as you're above. If you're below it, then you're looking for downside. If you're chopping through it, it's a terrible day to trade. I think chopping through VWAP means steer clear, turn your computer off, bad day. But you're above VWAP, number one, you're holding above it. Number two, you're grinding on the 90 EMA. The 90 EMA on the 5 minute is a great indicator, in my opinion, for continuation. What do you look for? For a reversal or to really get out? You want to see two candles close. One candle close below, right? Closing below here. But then you want to see another candle close and stay below the 90 EMA to signal its flipping trend, right? But you can see you stay above this almost all the way until right here, which is like 6:20 a.m. Now, obviously, if you're trading London session, you might not want to stay up from 1 a.m. until 6 a.m. That's depending where you're located, right? But again, that's how you moved here, and you get that, and then you eventually ended up pushing back up as well, all the way into basically New York session, where you kind of dip to VWAP, and VWAP's always at a great time to signify reversal, buyers coming back in the market, and you bounce back up. So a great example there of looking at previous highs, previous big levels, swing highs, whatever it may be. Now, this is all-time highs. So again, some of you might be like, well, this is skewed. Tyler, you're looking at all-time highs, whatever it may be. You can look at this a million different ways. You really can. So if I zoom back, and again, it's easier said than done, and I don't love doing this because it looks almost like I'm picking and choosing what I'm looking at, right? So I don't love doing that. I wanted to use this because this was something that I've been talking about on Twitter. And I mentioned live, I mentioned on YouTube, so it was all there. But what you can do is really just go back and really look at how you react to these pivots. Now, obviously here you have to know and how to spot and determine these key levels, which we have really deep dive videos into that as well. But when you're breaking into all-time highs or breaking down into lows, this is what I'm looking for consistently, like over and over. And I'll use this as a really big example here, 2106, give or take. Now, what this was is you broke in your previous high. This was your new all-time high. And then you dipped down, you made a level there, and you kind of rejected, and we stayed below it for like a week or so. Like, right, I think it was during Thanksgiving. Yeah, right after Thanksgiving too. And so what happens is you get back above that level. And this is an example of sometimes you just don't get that retest, right? You just don't. It's a market open, and you just go straight through it. Great example of just missing on the opportunity. But it's like I always say, there will always be another opportunity. There will always be another setup. So things that you have to look for when you're really attacking the market and trying to be prepared for this as well. And this goes into ES, this goes into the Dow, this goes into all of them. So right now I'm just like nitpicking, looking at, the NASDAQ. ES might have had a better play. ES might have given you a better opportunity. Dow as well. So again, when you see me mention these on Twitter, this is oftentimes what I'm looking at, that clear break, that retest, and getting the continuation. Oftentimes this can happen on the 1 minute as well. You just have to be watching, looking, knowing what to look for in the market as well. Now, before I let you out here, I'm going to give you my 3 tips as to how to implement this and things to look for so you don't blow your account up. Number one, like I said in the beginning, patience pays. I'm going to tell you right now, patience will pay in the long run. You're going to miss some setups. It's just the way that it is. That leads into step two. Guess what? There will always be another setup. I know you're looking at the NASDAQ running to all-time highs. You're like, I missed it. This is the end. Well, guess what? You're either going to break lows and break back down, or you're going to break highs and continue to break back up. And the setups will play out again and again and again. And the last thing I'm going to leave you with is risk to reward. In the beginning, I talked about letting the numbers, letting the stats play for themselves. When you have a good strategy, you have to trust the strategy, meaning you have to just take the trade, let it play out. Now, some days there will be times when I just like have a setup and I'm just like, I just don't trust it. Maybe there's news, something like that. But at the end of the day, I have to let my trades play for themselves. And again, you can do smaller account sizes, maybe go into micros instead of minis if you need to really figure out the strategy that works for you, and then slowly scale up from there. But remember, you have to actually give your strategy a chance, not stopping out too early, not taking profits too quick, because at the end of the day, if you don't let the numbers play out, then the numbers will ultimately lie to you in the end. Because if you're taking profits way too early and your risk reward is all skewed, then again, it's really not proven to be a winning strategy or a losing strategy. Again, that's my opinion. If you have questions, comment down below. The Twitter link, everything like that is down below as well. I appreciate you. I'll see you next time.